A lot of talk in the Cardano community about the recent crackdown on crypto, including staking and stablecoins. And so we're going to talk about that in this video and have a look at the latest on Cardano and how the ecosystem is growing. We've just had a hard fork combinator event. That is actually when an upgrade occurs to the blockchain. It happened basically without anyone knowing. That is why Cardano is up almost 10% in the last 24 hours. That hard fork went successfully, but we're going to look at the ecosystem growth, and I'll leave timestamps for everything down in the description below. The recent hard fork actually gave us a very important upgrade, which is a change to the elliptical curves and the cryptography that Cardano uses, so to make it more interoperable with other chains. So if other developers are trying to also integrate with Cardano, that is easier for them now. And so I think that is a very positive upgrade that's gone through successfully. And Cardano has traded up almost 8% in the last 24 hours on the back of that. That news way overshadowed by a lot of the FUD that's coming out around staking and everything else. So we're going to talk about that in this video. We're going to talk about DeFi as well. Check out the Crypto Investor course linked below. The course now has over 300 videos. I just updated the course with some brand new content, so check that out by the link in the description. Things are pointing in the right direction for Cardano. You can see that the total value locked on the network is just starting to tick up as more applications are coming on board. We have more DeFi, which I'm going to get onto big time in a second. We also have almost 4 million wallets on the blockchain right now, and absolutely no problem with scaling. So we can have a big uptick in activity, and there's going to be no problems with delayed transactions or very, very high fees. So that is very good as well. You can see in terms of just above my head, in terms of transactions and payments, we're looking at around 200,000 a day. Still a long way off the leading networks like BNB Chain and Polygon. They're really doing a few million transactions a day. But Cardano is very different to them. It's really a base layer. Definitely not that type of activity as yet. But the TVL transactions seem to be way off the lows in terms of the bear market, pointing in the right direction. Adjusted volume, everything, seems to be coming off those lows and moving back into a growth phase. The JED stablecoin is probably one of the biggest launches for Cardano. Now remember, if you're American, you actually can't access JED, and it's blocked for you guys in the States, and that's because of regulation. And we'll talk about regulation of stablecoins and staking in a second. But people outside of the States, for now, most countries can use JED if they want and they wish to. You can see they've updated JED to now interact with some very popular community wallets like Eternal, Flint Wallet, Yoroi as well. So that is good news for JED. Now, in terms of activity for JED, I think the product launch has been mostly a success. Now, this is a very experimental type of product, which is a crypto-backed stablecoin. Most stablecoins in their history have lost their peg to the dollar at some point in their history, just due to market conditions. This is a stablecoin that's traded in the open market, and so its price is going to fluctuate a little bit, and it will depeg at some points. Now, if you hold JED, you can always redeem it one for one from the JED protocol. So if you see in the market that JED is trading at, let's say, 90 cents instead of $1, you can just redeem it from the protocol if the protocol is within its limits as well, because as we know, JED is an over-collateralized stablecoin, so for every $1 of JED, there must be at least $4 of ADA to back that, 400% over-collateralization. Of course, if ADA plummets to zero, there's going to be an issue there as well. And so I would advise people to use caution with these type of things, and maybe wait for a asset-backed stablecoin like USDA, which is supposedly coming in the first quarter of this year as well. But a total of 2.1 million JED has been minted, and a small amount burned, around 150K. The average reserve ratio in the past week was around 629%. So for every $1 of JED, there's $6.29 worth of ADA sloshing around to actually back that value, which is good. We can look at these stats right here, though. It's just dropped a little bit, now 520%. So keep an eye on that. You definitely don't want it going below 400. Now, when 400 hits, that means that there's $4 of ADA for every $1 of JED, but you won't be able to mint new JED during that time. The only thing you can do is actually put more reserve in. So, that 400 can actually go below 400. If it reaches 400 and then the price of ADA drops, it will go below 400. And so, this is something that most people might not want to hold in general because of the kind of way that this is done. Most people would probably rather hold a one-for-one dollar-backed stablecoin like USDA, which may be coming this quarter, despite some of the regulatory crackdowns that we've seen. So where do stablecoins stand now, especially on Cardano? Because we have JED, and that is already not really allowed in the States, right? So algorithmic stablecoins, you can see the administration there have come out and really just said algo stablecoins are a big no, crypto-backed stablecoins are a big no. Now, they've taken a slightly different stance on asset-backed stablecoins. That is, for example, USD coin, which is backed by essentially treasury deposits in a bank account and some cash as well. And USDA, which is a stablecoin that was going to launch in the first quarter of this year on Cardano, was about essentially the same thing. Recently, Paxos faced a lawsuit from the SEC about Binance US dollar, which under the surface was actually no different to something like USD coin, USDC. It had very high quality assets in bank accounts backing the dollar one for one. Still, the SEC actually issued a Wells notice, which was a notice to then sue for an unregistered securities offering. If the stablecoin is deemed a security, there's big issues because essentially in America anyway, retail investors essentially can't hold it at that point. Big issues. However, it seems like the NYDFS, which actually regulates Paxos, told them to stop issuing BUSD specifically, but Paxos have Paxos dollar as well, which is exactly the same thing as BUSD under the hood. BUSD was just a branding arrangement, and USDP or Paxos US dollar has not been subject to this same notice. So it's very strange that they've been going specifically after Binance USD. There are some rumors that maybe the way that Binance actually pegged their currency off of Ethereum and onto the Binance Smart Chain was a bit of an issue there, but they've specifically gone after BUSD. USD coin has not seen any action as yet, meaning potentially the SEC aren't specifically going after stable coins, but potentially basically just going after Binance. Maybe Binance did something wrong against the terms. So that's where we stand right now. Where does that leave Cardano's Anzan's USDA? Well, USDA is going to be a regulated, apparently, stablecoin. So everything in a bank account, one for one. Every dollar of USDA backed one for one in a bank account by cash deposits, CDs, treasuries, very short-term treasuries, which is exactly the same as what USDC actually do. Now, for most people, this is probably preferential to holding a crypto-backed stablecoin with all of the algorithms that you have to rely on. At least you have a one-for-one backing. USDA for right now has not said anything about delaying the launch, but obviously it's not a great time in terms of regulation for launching new products like this. USDA for me is one of the most important launches, and so I very much hope that this isn't being delayed because of regulation. Stablecoins are the oil in the engine of a blockchain. Everyone uses them to trade against and also to provide liquidity. It's very important for DeFi, and it's very important for ADA to have something like this to grow its TVL and its use cases. Now, for right now, Coinbase have recently tweeted out that they actually believe that this type of stablecoin, what USDA would be, is not a security according to them. Now, Coinbase have very good lawyers. They're a listed company in America, and so they probably have very good legal counsel. And they have said the NYDFS here has ordered US-based Paxos to stop issuing the BUSD. And as you can see here, we don't know what aspects of BUSD might be of interest to the SEC. We do know stablecoins are not securities, and this is their position. So they're actually taking this position in public against the SEC. This is a public notice to the SEC that if the SEC go after them and USDC, because remember Coinbase have a big chunk of the Circle, so they've invested in Circle, so it's kind of the same thing, right? They're products that are part of the same ownership structure. Then you can see here, they're essentially telling the SEC, if you sue us, we're going to sue you back and we're going to go to court. Stablecoins like this are not securities. This is good news for me in that something like USDA would essentially have the same makeup as USD coin. So potentially good news here, but I think this is going to be a long-running saga of actions by the SEC overstepping their jurisdiction, which isn't great news, but USDA, hopefully it will launch and they won't kind of delay it from fears that it might get attacked by the SEC. Coming to DeFi on Cardano, which is the growth area right now, things are looking good, albeit from a very low level. So 110 million TVL right here, if you don't count all of the Cardano that's actually staked directly in the protocol, which a lot of other protocols do. So on Ethereum, Lido is about $8-9 billion worth of TVL, and that's a staking protocol. Cardano does this on the base layer, and it's not included. So just to keep that in mind. But as we can see here, from a very low level, around 110 million TVL, that's way, way lower than the competition. If you're looking at Ethereum, Binance, even the scaling solutions like Arbitrum, you're seeing about $1 billion on Arbitrum, Polygon about $1 billion, Avalanche about $1 billion as well. But this is going in the right direction, and a lot of these scaling layers aren't. Now, yeah, we are coming from a very low level here. As you can see, only 110 million TVL, but we can see the actual rate of change here is to the upside, which is very good. If you're looking at some other competitors like Solana, it's pretty much down only here for their TVL as well, 250 million. So, Cardano is building just at a very different pace to other applications and protocols, and doing things in a different way, and just having kind of a different cadence of growth. Now, with DeFi, we have to be careful as well in that with the SEC coming out and taking action against a lot of centralized protocols, we must assume that all of these DeFi primitives on top of Cardano, not just Cardano, but on other chains like Ethereum as well, a lot of these applications may see a lot of regulatory action coming to them, which isn't great news for them. Now, that's just in the States. In other countries, a lot of this isn't really regulated as it is in the States, and so obviously each jurisdiction is a little bit different, and that's some of what the Cardano community have been basically arguing about this week, is that how does Cardano now try to give regulators what they need and they want whilst remaining decentralized and giving people those options. So we're going to talk about that in a second. But as we can see here, all of the DeFi on Cardano is really going very well now that we have some stablecoins in here. We have Indigo Protocol with about 17 million TVL, Wing Riders and MinSwap, which are DEXs here, growing their TVL. Wing Riders actually grown at 50% over the last month. A lot of the JED stablecoin is on there. So that's going towards Wing Riders because you can provide liquidity with JED and then earn some interest or passive income on that from fees. And then some other players as well growing TVL slowly but surely on Cardano. So from a low level, it's growing very well. But of course, regulation now is something we have to worry about with all of these DeFi protocols, because let's be fair, they are offering products and services that should be regulated. Now, are they going to be regulated as code? Which is very different to a securities offering, or are the SEC just going to wallop all of them at once? We don't actually know that right now. There's a very big difference between a DeFi app offering you lending yields or something like that and staking. Staking, in my opinion, from what I've seen from the SEC actions, is not going to be regulated as a security, and it's a very different thing. The SEC have not gone after the protocols. It's basically impossible to do. Staking for me is something that a blockchain does. It is actually code, and it's a pass-through. It's not a security. It can't be judged as such. Now, Kraken obviously had a $30 million fine for their staking product. This is what got everyone talking. Now, from what I've seen on Kraken, if you look at what they're actually doing here, they are not just using a pass-through staking. So they're not just doing a service where they say, this is what the blockchain gives you. That's exactly what we're going to give you, and we'll take a 10% fee and pass it back to you. What they were actually doing as part of a lot of these different products was offering flexibility. So they were staking some of the coins, they were leaving some of the coins out and using them in a different way potentially, and they were offering flexibility of coming in and out of staking that the blockchain itself didn't provide. They were potentially offering rewards that were slightly above the blockchain as well, potentially meaning that they were using them for other methods, maybe lending them or something like that. I'm not really sure of the underlying, but a lot of these products, if you look at the terms and what the SEC had as a problem, they weren't just staking for you and taking a fee. They're actually doing something else and offering you a product with a yield. Maybe some of that was blockchain staking and some of that wasn't. Now, as a security goes, that is the definition of a security. If you tell someone, give me value and I'll do some stuff with it and give you a yield, and you're a centralized player, that is a security under the securities laws in America. Staking is totally different. It is something paid by validators on a blockchain, which is code, and it's not a security because a piece of code or a blockchain obviously doesn't pass the Howey test in terms of what makes a security or an investment contract. Now, something that Coinbase also agrees with, as you can see in this case, Coinbase's staking services are not securities. Again, a public announcement to the SEC that if the SEC go after them, they will take the SEC to court and try and defend that staking itself is not a security. And what Coinbase do is take your money, put it on the blockchain, and then whatever the blockchain gives you, they give you it back and they take their fee. That is apparently not what Kraken was doing, and that's not what an underlying blockchain does. And so all of this about staking on Cardano, will it be regulated as a security? It's not what the SEC are after. If you are looking to get more pro with crypto, check out the Crypto Investor course, link in description. We actually have a Cardano chat group as well. Many are active in there with lots of the Cardano research that people are doing as well. So check that out via the link below. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.